Hello everyone, this is Abhijit and Ron Singh. Welcome to the Charts Are Fun weekly session, the week of August 26th. Today we're recording at August 30th, end of the market close. Exciting week. People were expecting absolutely wonderful numbers from nvidia, which they did. They exceeded the expectation. 65 cents was the expectation. They beat it, announced 68 cents, and revenue was expected to be around 28.4. They exceeded that, crossing the 30 billion mark. They did also project for the next quarter pretty strong numbers, over 32 billion. However, as expected, market was expecting even a stronger forecast, even a stronger beat. As a result, nvidia sold off on Thursday. It was down about a little over 6%. Today it did have a positive move back up about 1.2, 1.3%. A big event today is Warren Buffett, the Oracle of Omaha, as many people call it, the god of investment, the god of one of the best companies out there in the world, celebrated his 94th birthday, and what could be a better celebration than his company Berkshire Hathaway hitting the trillion mark, the trillion market cap mark this week. It's the first non-tech company hitting that mark. As you know, in the trillion club, we have the biggest ones, the biggest of the biggest, Microsoft, Apple, nvidia. Then we've got Google, Amazon, and Meta. So those are the top 6 of the tech companies in the trillion club. And Warren Buffett's Berkshire Hathaway hit the trillion mark this week. So today we will be looking at where Berkshire Hathaway is headed, look at his top 10 stocks from his holdings, and then also a little bit about the very well-known Buffett indicator that many people are talking about. People are saying that Buffett measures the market's valuation with respect to whether it's stretched, whether it's extremely overbought and overvalued by looking at the total US market's capitalization divided by the GDP. And when that hits over the 200% mark, right now it's over 202%, that's a red flag. He believes that there's not much of upside in terms of making additional gains. And he's been cautioning, he's been raising cash, been selling almost half his portfolio in Apple. Also has been selling quite actively Bank of America. And he's raised cash over the last couple of years. Right now at his cash holdings as of end of June was been over 276 billion. So at a trillion market cap, 276 billion of cash means almost 27% of cash holdings is what he holds. And he's probably waiting for the right opportunity. He doesn't think this is the right time. And if any, he expects maybe some form of a market correction or pullback. So we'll look at the S&P chart. We'll also look at where we think it could be headed, but we could also look at every 2 to 3 years, we get call it a cyclical bear market. Yes, we are no question in a secular bull market that started around 2013. That typically goes on for 20 years. So from 2013 to 2033, we can expect another 9 years or so for this secular bull market to continue. But the key is the cyclical bear markets do happen. It's anywhere from 15 to 20% pullbacks every 2 to 3 years. We'll see if 2025 is setting up for one. So with that, let me share the screen. So first, point you to our blog site. It's chartsarefun.substack.com. We talked about Warren Buffett's company Berkshire Hathaway hitting the $1 trillion. That was a blog yesterday. Today we talked about the Indian stock market, Nifty. That's been on a steady climb after the election related results setback in early June. It had tanked 2,000 points in a single day. And from there, it's reclaimed that 2,000 point drop just the day after when the market realized that Prime Minister Moody, after all, is going to be the continued Prime Minister with a coalition government. So it's been on a steady climb. It's measured to be around 25.5K is where the target is on that cup and handle kind of pattern. There is negative divergence on the chart. We talked about that. And right now, it's also selling at a valuation among the top high end of the global markets at over 24 price over earnings multiple of the Nifty. So we're talking about 25.5. It's pretty close. It closed near 25.3 today at the end of the month of August. So not much upside left with respect to if you look at the pattern and if you look at the, the negative divergence in RSI. The YouTube site is Charts Are Fun. We appreciate you subscribing to our channel, and if you do like the videos, if you could hit the like button, I really appreciate that. So with that, let's look at this Buffett indicator. This is what many people have been talking about in Twitter, sharing out there. Take the US market, the net market, capitalization, and then divide that by the GDP. It's hitting close to 202% right now, exceeding, as you can see, the internet bubble exceeded just about the 200% around like early 2000, right after 99. And then we had a similar kind of spike up from 2020 after the entire stimulus on COVID came back. Around 21, we had hit a very kind of capitulatory peak up there, closer towards the 2.3, 2.4 standard deviation. Pull back from there when we got the cyclical bear market in 2022. And then since the last couple of years, it's been on a steady climb. So we can see now it's 2.1 standard deviation, or a little over 2 is what we are seeing right now. So from a Buffett's indicator, this is a caution. So given that, let's look at the S&P 500 monthly chart. This is, as we are seeing, a span of over 12 years, from 2012 all the way to 2024. And we can see that we actually, with that big drop on August 5th with the Japanese stock market crash, market has rallied back 10%, little more than 10%, S&P. S&P hit a low of 51.19 on that day on August 5th and recovered towards over 10%, claiming over 530 points from there, closing near 556.49 today, August 30th, the last day of the month. We can see that there is a bit of a negative divergence on the RSI on the S&P 500. We can see successive lower highs, much stronger RSI in the 2018 timeframe. The 2021 RSI wasn't as strong as the 2018, and now to the peak we are climbing, RSI is a little weaker. We can also see that over this 12-year horizon, every 2 to 3 years, we see some form of a market correction, a bear, call it a cyclical bear market. 2012 we saw that, then we came in, we saw that again in late 2014, then we saw that in 2016, so 2 years from 14 to 2016, late 2015, but the bottom didn't come till early 2016. Then from there we had a span of 16, 17, and then into 2018 we saw a pullback again. Then we had kind of 2018, we had an early pullback in the early part of 2018, but the real pullback came towards late 2018 into 19. Then we got the COVID, of course, was an unexpected kind of collapse in the entire world markets because of the pandemic, but that was a very sharp drop. We recovered very strongly. 2021, late 21, we peaked out, got a correction. That was a cyclical bear market that we got in 2022 from the roughly call it the 48.18 level to 36. We actually had pulled back even a little lower to somewhere around 34.90 something. 34.92 was the final low around October of that year. Since then we have rallied back, and we are now closer towards the 5,600, 5,700. So if we look at the pattern on the weekly chart of S&P, we can see a cup and handle. In this case, 4,800 was the peak in 21, pulled back to 34.91 in October of 22, came back up towards very close to the 4,800. So you're talking about 35 to 48 is 1,300 points, and then you can add another 8 points of the 34.92 to 3,500, about 8 points. So you're talking about 1,308 points added to 4,800. That's closer to 6,100. Now, that's a projected target of where S&P could head. If you look at the near term, where S&P topped out near 56.69 in the July timeframe, pulled back to 51.19 on that August 5th Japan collapse, has recovered back, almost closed back to the July high near 56.69. It tested 56.51. If we can get a shallow handle here and then a breakout of 51.19 to a 56.69 is a 550 point difference. Add that to the brim of the cup, 550 to 56.69 takes us to 60.209, 6,200. So there's a possibility that we are expecting S&P to continue a bullish breakout to that level. And then from there, this could time out to be like early 2025, and then we get a cyclical bear market pullback. It's a possible. And from there, you can see that the rising 50-week moving average is near 5,000. We know that there is strong support in the 4,800 level, the 2021 peak. So there's a possibility we could get a 20% pullback from 6,200 to somewhere around, the 5,000 level. There's a possibility, something to think about. We said we're going to look at Berkshire Hathaway, Warren Buffett's 94th birthday today, and we're going to look at his top 10 holdings. As you know, he has some companies that he has outright bought, and he runs those companies as managed companies of the Berkshire Hathaway's positions, like Geico, like Dairy Queen. There are several of those that he manages and runs. And then there is the ones that he has majority, like he takes positions in. 30% by weight of that portfolio is Apple. Then we have Bank of America, American Express, Coca Cola, Chevron, Occidental Petroleum, Moody's, Kraft Heinz, Chubb, and DaVita. So we're going to look at these. We're going to look at these top 10 holdings by weight and go and see where those charts are headed. Warren, this was a New York Times article talking about this week when Berkshire Hathaway hit the trillion mark. You look at this chart, absolutely parabolic. In a span of 24 years, somewhere around the 100 billion mark was the market cap towards 2000. It has almost, gone 10 times from there towards, the 1 trillion level is where it is at. So multiply 10 times in a span of 24 years, that's roughly compound average at 10 to 11%, which is what the market goes at. But if you look at this chart, it's a beautiful parabolic chart, almost looks like a chart of a technology stock, but it's not. It's as diversified as it could be. It's almost a barometer of the US economy with the kinds of stocks in insurance companies, in technology like Apple. He recently went into Amazon as well, a small position. So he's also betting on the cloud business. He's got, various banks, for example, petroleum companies in the natural gas and the oil sector, Occidental Petroleum and Chevron. And it's pretty well diversified. It's almost, as I said, a barometer of the US economy. And that's done outstanding well. So let's look at the Berkshire Hathaway B shares and let's look at the weekly chart of that. We can see that there is a beautiful cup and handle between 362 on the left brim, pulled back towards the 259 level in October of 2022, came back to the right brim at 373, formed a shallow handle and then broke out. That measured target is 486. We came pretty close. We closed near 476, within 10 points of that target. What is a concern is this negative divergence. We can see as it's been climbing, RSI is at lower highs, something to be looked at. And while there's been steady accumulation, no question, over the last several months, this could, in near term, perhaps find a bit of a breather and start pulling back after it meets that 486 target, something to look at. Now, if you look at some of his core holdings, the top 10, as I said, the biggest by weight is Apple. That's also got cup and handle, but the right brim is higher than the left brim. So it was at 179 in that, or 180 in that 2021 peak, pulled back to bottom near December of 2022 at 123, came back towards the 129 level to form, 199 level. So 179 is the left brim, the bottom of the cup is 123, the right brim is 199. And then I had shallow handle from there from 199 to 163 over the first part of this year, and then it broke out. Dan Ives and others have been extremely bullish, talking about bullish forecasts on Apple to 275. You can see from this chart why that's the case. If you take this measured cup, the base of the cup from 199 to 123, that's roughly 76 points. At 76 to 199, that's 275. Exact measured target is 274.73, pretty close to 275, and that's where Apple could be headed. Also near term, there is a cup and handle forming just over the last 6 to 7 weeks. 236 it hit in July, pulled back to 195 on that Japan crash day on August 5th. Came back up towards the 232, 233 tested this week. Maybe a shallow pullback here from the 235, maybe a 5 to 10 point handle, and then a breakout. So 195 to 235, that's dropped to 40 points. 40 to 235 is 275. So that's where we think Apple is headed. So for those that are Apple bulls, and if you remember, Warren Buffett did not sell his entire stake. He only sold half his position. He probably is waiting for that 275, and then he's going to maybe completely sell his Apple position. Valuation wise, no question, Apple is getting overstretched and way too high with respect to its growth versus its P by E, which is right now north of 35. Bank of America has also got a beautiful cup and handle. Near-term cup and handle target has already been met. There was a cup and handle between here we can see at the 36.7, 24 to the 34. So 24 to 34 is 10 points. Add that to 34, 44. So it's already met that. However, on the longer term, if you look at 2022 peak from somewhere near 46 to the bottom of the cup near 24, the right brim of the cup at 44, that's 20 points, 24 to 44. Add that to 44.64. So if Bank of America, if the financials do well with net interest rate margins getting better as interest rates come down, borrowing costs of the banks come down, and then they're able to make more loans to, if the soft landing is something that the Federal Reserve is able to pull through, Bank of America could perhaps do well into the next couple of years, and that 64 could be its ultimate target that it would go to. American Express, on the other hand, also has a cup and handle. From 192, had pulled back towards the 127 level, came back towards the closer towards the 190, had a very 1 or 2 week kind of a pullback, very, very shallow handle, and then broke out. That measure target is 248, which are already met. It has reached 261 as of this week. There is negative divergence on this chart. We know that the US consumers beginning to hurt from these high interest rates. Credit cards are being stretched with respect to delinquencies. Something for us to be cautious about for the American Express. The negative divergence in particular on the weekly chart could mean near-term top to be formed and some form of a pullback. Typically, these pullbacks would be the first resting point could be the 20-week moving average, which is rising near 236, and then the blue moving average is the 50-week moving average, which is closer to the 205. So it's a possibility that we could maybe see a pullback of American Express starting off maybe towards a 10% towards the 236, and then if it gets deeper towards the 205 level. The next one is Coca Cola. That has also had a beautiful move. The measured target on that was 71.57, another beautiful cup and handle from 62.5 on the left brim, the base of the cup at 50, right brim near 61. So that if you add to the 50.35 to 60.96, it's roughly 10.61. Add that to 60.96, you get a 71.57. So that's where we see the Coca-Cola headed. It already exceeded that. It hit 72.5 this week. So something where we should look at near-term pullback on that, having met its target. Chevron and Occidental Petroleum are two of his biggest, call it, energy sector buys. He's a firm believer that both are innovating significantly. While we would think that from a mother planet, these are at the end carbon producing companies, both of them have huge innovations in the decarbonization. That Warren Buffett is betting big that their decarbonization will pay off, and he is betting that the world is flush in oil, will continue to drill and continue to use oil for all our needs, and hence he is very bullish on both Chevron and Occidental Petroleum. Chevron has been range bound. We can see on our upper side at 164.5, 165, on the lower side near 135. So that's a 30-point band. It's been trading for literally the last almost, I would say, 12 months. If it breaks out, which right now it depends on the price of oil, geopolitical uncertainty recently hasn't caused oil to break out. There seems to be concerns about demand for oil, with China especially hurting so much with their economy. The demand for oil overall is a bit muted. But if that does break out, if China comes back, if the consumption of oil goes up, that breakout target is 192. So Chevron is one of his strong holdings. He believes very strongly in it, and he continues to hold. Similar kind of pattern on Occidental Petroleum, something that again he's been adding shares quite actively, range bound between 70 to 71 on the top and 54 on the bottom, 54, 55. That breakout takes it to 87. Right now it's near 57, 30 points higher. Again, a company that he strongly believes in for the decarbonization innovation that they do and the efficiency of they have natural gas and oil, the drilling and the kinds of energy that they produce. Now, looking at Moody's, which we know is a financial company, it's a credit agency, rates the various debts of various governments, various bonds, and so on. He's a strong believer in their kind of business model, in how profitable they are. This one is also a cup and handle from 390 to 393 on the left brim, came to 225, came back to 394 on the right brim. Kind of a horizontal handle right there, and then broke out. That measured target is 563. It hasn't quite reached. It has only come out to 588. So we're talking about another, 75 points or so more to climb on this. So another 15% or so. So it's possible that Moody's continues its climb. The next one is Kraft Heinz. This is the ketchup maker. A bit of an ascending triangle. It's a staple, so it's in a much tighter range. It doesn't, trade in wild swings. 38 is on the top. The rising bottom from 29 to 31. If that breakout comes over 38, that measured target is closer to 49. So there is upside on, Kraft Heinz, and he continues to hold it, believing in its long-term value. He believes in food. He's a huge fan of, Omaha steaks. He's a huge fan of just Coca Cola. He's a huge fan. That's a beverage, but he feels that Kraft Heinz will continue to be a stable condiment that people will continue for their sauces and consuming it for eternity. Chubb is a big believer of, as we know, with his Geico, which he fully holds, but he's been making investments in Chubb. It's a property casualty. They have insurance across the board in the US. They have auto insurance as well. This one, 224 on the left rim, 179 or 180 on the bottom of the cup. Top of the cup, 227.97 or 228. Measure the difference, add it up to 276 is the target. It's met it. It met 284, 285. So this is a target, bit of a negative divergence with RSI printing lower highs, and then same thing with PPO, lower highs. I would be concerned on this having much more upside. Time for this to have a pullback. Finally, the top 10 holding that he has is DaVita. This is playing the aging US economy. A lot of people, as their kidneys fail with age, need dialysis. This has got dialysis change around the country, growing. Very, very efficient ways of doing dialysis in a fashion so that you don't have to go to a physical hospital. These are chains sprawling across the country, and you just go and outpatient, get your dialysis done and back home. And this one is a bit of an ascending triangle, 124.8 or 125 on the top, 65 on the bottom. Measured the target is 168, hasn't quite met the target. It met 156. So within 12 points of that target, there's a bit of negative divergence here as well, both on PPO with lower highs and an RSI. Something to be concerned about, something that I think once it meets the 168, good chance that from there it starts pulling back. In summary, if I look at all these top 10 holdings, starting with Apple, look at its relative performance to S&P 500 over the last 3 years, from late 2021 to 2024 now. 25% Apple, relatively performance to S&P, beating S&P by 25%. Look at Bank of America, beating it by 18%. Well, Bank of America, not really, minus 18. So this one was a bit of a setback. In a 3-year time horizon, this is negative to S&P, down 18. Look at American Express, up 34%, even stronger than Apple. Look at Coca Cola at 13%. So stable. So it's a beverage. You don't expect it to necessarily have a very high, relative performance to S&P, but yes, it still beats S&P at over 13%. Chevron Mobile, it's at 30%, outperforming S&P. Occidental Petroleum, outperforming by 64%, double of Chevron. Moody's outperforms by 5%. It's a more stable. Look at Kraft Heinz. It's negative performance to S&P, down 12%. And Chubb is outperforming by 30%, just like Apple. And then finally, DaVita is outperforming by, it doesn't outperform, slightly underperforming S&P by 3%. So brilliantly, managed holding of Berkshire Hathaway. No wonder people respect him. People respect his genius and how he picks stocks that are long timers, that have strong moats, strong franchises, and can continue generating strong cash flow. With that, wishing him all the best for his 94th birthday. May he continue to live. I know that he's planning to transition the company to Greg Abel, but our homage and respect to him, and may the world benefit from his genius, from his acumen, and the short thoughts on the financial world that he shares in his annual shareholder letters every year, and also during the shareholder meeting that he conducts. Thank you, and talk to you next week.